Hello everyone, this is Corey Mitchell with your TradeThatSwing.com swing trading stock market outlook for the week of September 25th. And each week I go through the same process, just looking at health indicators, how indices have been performing, how watch lists have been performing, and that tells me how aggressive I'm going to be throughout the week. And this is the overall process. I look at overall market conditions. Then if conditions are good for going long or short, then we can look at those individual trades. Then I look for patterns within those and then actual trade triggers. So that's basically the formula of how I swing trade. So we're looking at this overall market conditions in this video. Conditions are poor right now. Nothing makes me want to jump into the market right now. So I'm going to currently hold off on deploying swing trading capital until conditions improve. There are some of the old watch lists out there that you can monitor just to see how stocks are doing. We have the best swing trading stocks list for September. That's high momentum stocks. The current stock watch list, that's actual setups that were forming. I haven't updated this since the end of August, since conditions turned unfavorable in August. And those looking for, you can also look for setups on these lists, the best performing ETFs, the best performing stocks. Obviously these have been doing very well, so maybe some opportunities in there, again, if conditions turn good. And also of interest in investing, when conditions are poor, I'm not just sitting idly on my hands. I do passive investing. I'll talk a little bit about that at the end of the video. But I do some active investing as well, and that's, trades that last a year, maybe 6 months on the short term, but usually like a year, a couple years, and pullback can provide good opportunities for buying really great quality companies at a discount. So I have a few lists on that: buy the dip stock list, buy and hold list, and the best long-term dividend stocks. It is different than swing trading. Do not take my swing trading method and try to apply it to investing. It is a different thing. I'm buying those investments at lower prices, whereas swing trading I'm usually looking to buy at higher and higher prices as the price goes up. So different methods. But just some ideas for you to dabble into if you're getting bored when the market's dropping. How the market indices are doing, let's get into that. So I look at a few different indexes, and right now they are all in pullbacks and dropping. Yes, and even this is the Canadian index. So we have the NASDAQ 100 tech heavy, S&P 500 large US companies, the Russell 2000 small companies, and the NYSE composite, a mix of everything. And you can see they all pretty much have this same zigzag pattern downwards. NASDAQ holding up a little bit above its prior low. All the other ones have dropped below the prior low from August. So not anything I just want to jump into. Don't know how far this is going to run. So we wait for the bounce, we wait for our health indicators, which we're going to discuss next, to start performing. Bitcoin just up here, I usually throw a chart in this bottom right corner, just a random one with something interesting going on. Bitcoin, actually maybe not that interesting. No uptrend, in a range. Basically I would need to see a big run up into the middle of this range, above this swing high, pull back. Likely I'd like to see a small pullback before the price starts running. Then maybe I'd get involved. Same thing to the downside. High possibility of false breakouts in either direction right around this prior low. We can see we've been ranging, and now we've been ranging again in the short term. So could see little whipsaw moves either inside or outside. So I want to see a bigger move either down or up before getting involved in that. So basically what we discussed from a price action perspective, everything dropping in pullbacks. One thing we'll look at is the pullbacks. It shows up a little bit better on our health indicator chart. So based on these indices pulling back, that's why I'm staying out of swing trades right now. let's look at the health indicators. First, I just drew some things on here that show how big the declines were throughout this rally. So we had an 8% one, a 9% one. That one got cut off a little bit, but it was just over 3%. This one close to 3%. This one close to 3%. We're at about a 6% pullback. So we are still well within normal pullback tendencies. So this is, we can't say this is a crash yet, but it's a little bit bigger than what we've seen recently, but not so much what we saw, or not as big as what we saw earlier in the trend. So that could still happen, but right now I would call this a normal and highly common pullback. We go to the health indicators. This is how many stocks are above their 50-day moving average. The blue line is all U.S. stocks. The red line is S&P 500 stocks. So you can see about 18 to 22% of stocks above their 50-day moving average. Pretty much 80% are below their 50-day moving average. Not very conducive to uptrending. Most of those stocks are not uptrending. So not something I want to be buying into. Much easier to make money when this indicator is above 50. You'll notice that's generally a period of prices moving higher, and when it's dropping or moving below this, then tougher to make money on the long side because most stocks are dropping then. Volume not important at the moment. This is the daily average movement of the S&P 500, its percentage, and I'm really concerned when we get drops in a single day over 2%. And I just want to highlight this is still a smiley face, because if you look at this 2023, much smaller movement, that is more typical of uptrending behavior. We can go back here to late 2021 when the market was in an uptrend. You have typically very small movement. You might get the odd little bit bigger movement day, but for the most part you have this, tidy, smaller movement. And then we have 2022 marked by this huge daily movement, and that is representative of downtrends, volatility. And so this is still actually pretty good. It's pretty quiet so far in 2023, and that is a good thing. I mean, that could change at any time with one or two big drops, but at the moment this is good and showing we are still in uptrending behavior. Even during this decline, we haven't had any massive single day drops. I consider big single day drops to be 2% or more in the S&P 500. This is the advanced decline line. It's just advancing stocks minus declining stocks as a cumulative number, and it's basically tracking the S&P 500 right now, which is in the pullback. So this is in a pullback, so that's not great. It would be better if this was making some higher highs while this was dropping. That would be a favorable sign. That would be a positive divergence saying that there's some underlying strength there. But since it's just moving with it, that's not good. Or it's just confirming what the index is doing. And this is up volume versus total volume. I'm calling this neutral right now. There was a bullish signal back here in August, and we did get a little pop following that, but we've made a lower swing low since. So I basically think this, did what it was signaling in a way in the price that went up, but now that we've made a new swing low, I would call that basically irrelevant. So this is neutral at the moment with no recent signals. Ultimate indicator is how many quality setups there are and how trades are working. Actually, going through my last watch list, which is almost a month old, there's still some stocks that are doing well on that, and that's encouraging, even though I haven't been buying anything. So that does give me a bit of confidence that when conditions do turn, there are still stocks that are doing very well out there. And so, just a little more confidence to keep buying when conditions turn better. Sectors on the move. Pretty much everything smoked last week. And when we kind of look at all of these, there's only two sectors that are hanging out in the upper quadrant of all three of these. And we have energy and financials, energy and financials, energy and financials. These other ones like communication services and consumer cyclical got smoked pretty hard last week and has moved them down all of these lists, and they're not profitable over the last communication services just barely in there profitable over the last 3 months. So they may come back, but for right now it seems that energy and financials are the top performers, and just something to keep in mind. But these other ones could have a resurgence, and I expect that they would as the uptrend continues. So what am I doing right now? Well, I'm sitting in cash waiting for conditions to improve, and as I always discuss, I day trade and swing trade. That gives me something to do every day to potentially make some money when swing trading is not that active. And then you can check out those. And then I also passively invest. So I talked a little bit about active investing before, and I also passively invest. So if you want to just do some buying of ETFs, which have 10 to 15% returns over the long run, we just do this each month, whether the market's going up or down. So again, one of those things, a little bit of something to do when things are quiet that are advantageous over the long term. So that's passive investing, and I do that as well, and also discuss the active investing, which can be done during these declines, picking up some strong stocks that have been pulled down by these drops in the overall market, because about 80% of all stocks will move with the market indices, and that's why I tend to look at them to help me decide if I want to be actively buying individual stocks. Because if the S&P 500 and the NASDAQ are all dropping, 80% of stocks are going to be doing the same thing. So that's your market outlook for the week of September 25th. Have a great week out there.